Hey, good morning. So we're coming at you on March 13th today. Got a lot to talk about. So want to start with the mortgage interest rates because I know they were creeping up the last couple weeks, which was different from what they were saying at the end of last year. They were saying this year was going to be a much better, and we obviously didn't see that the last couple weeks. So as of the 10th, 2 days ago, I did like a TikTok and Instagram reel talking about what NAR, National Association of Realtors, had just come out with. So with that, let me quickly show you. Let's get to this is what we have a lot of lenders that send us information. This was kind of a cool way to share this with you. So I thought, let's look at this. But basically, as of the 10th, when National Association, the economist Lawrence Yun said a bunch of stuff about inflation, CPI, the job market, this, that, and the other. The bottom line, the last sentence he said is mortgage rates should be looking a little bit better. But let's check out what this says. And I'm getting all the lenders sending me out stuff that rates have slightly improved. So here, basically, is talking about last week they were creeping higher, but improved on Friday on news that Silicon Valley Bank had to be saved by the FDC. This news has overshadowed the jobs data, which was expected to be the biggest event of the week. Mortgage rates benefited from traders seeking safety in the bond market, helping rates improve. So rates are moving lower, as the economist had stated on the 10th. Mortgage rates will move lower this week, and we've been seeing that. Each lender, they send me a bunch of them send me information every week, and so they're all showing the decline. As concerns skyrocket over what is being called a banking crisis in the media. And then what's affecting rates this week, just as the banking crisis, the unfolding reaction to this situation has markets expecting the Fed to lower the rates in 2023, contrary to previous expectations that the Fed would raise rates. This is the primary factor in mortgage rates this week. And then the Fed, mortgage rates are likely to move lower on updated expectations that the Fed will have to stop raising rates to fight inflation, and will even have to lower rates later in the year. And then when they look at the economic data, today's CPI inflation data would have been a major event for mortgage rates before the current banking situation, but will now take a backseat. So regardless, it looks like hopefully rates will be a little bit better. And so with that, let's go to, we just got the February statistics for the MLS for South Central Kansas. Let me just check here for a second. There's Sedgwick, of course. Okay, let's get back to the entire MLS. I have Sedgwick, so I'll peek in there for a few minutes at a time too. And so the one thing I do want to start with is be careful what you hear from a Wichita perspective in the national media. The national media tends toward all the big cities, which is different from what happens in Wichita, Kansas. I learned this big time when I bought a home in 2009. I thought it was the time, or at the end of 2008, when the crashing, I thought I was getting the best deal on the market because everybody was saying that, and Wichita basically doesn't really follow that, or it's huge lag time, a year or whatever it was. It wasn't following, because when I looked later, I was actually buying it at the peak of the market. So with that said, always pay, if you're looking to in Wichita or looking to move to Wichita, talk to a local real estate agent, because we do not, this stuff, if you're paying attention to the CNN, MSNBC, any of those data, it doesn't follow that way in Wichita all the time. So again, talk local. So anyways, let's get into it. This is the entire MLS. I will look at some Sedgwick County, but this is Sedgwick County, which is our most populated area, and then also all the other counties, which are rural counties, come into play here. So the one big difference is Sedgwick County will have a higher median price, because that is the bulk of the population. And of course, the rural areas will tend to go for a little bit less. But anyway, with that said, total home sales in South Central fell again last month. Let's look over here. Sorry about this. Let's go down here to see. So, okay, so let's look here. Home sales fell 658 to 568, down 13%. Not super bad compared to what we were seeing, but still, we'll get to another chart. Active listings, this is great news. From 576 last year to now we're starting to see over 1,000. That is terrific news. We had a 0.6 last year as far as month supply. We're now looking at 1.2 months supply. And let's see, contracts written are still lower. The data from February is coming a little bit off of, I consider, November and December, where the market kind of stopped, buyers stopped because the interest rates were going so high. So it's kind of reflecting in the February data, although things picked up pretty strongly in January and as well as February. And now although we're seeing interest rates change a little bit, as I just read, where the last couple of weeks interest rates were increasing. So that's going to be interesting to see what happens with the new information that I just provided a few minutes ago. Pending contracts, about the same, a little bit down. And sales volume is down. Let's go to median price, which is more accurate here. So we're looking at, that's a pretty good size jump. I got the question asked today, well, I heard that prices were getting lower and supposed to be lower, and I had to explain to her, no, let me tell you about all the buyers I've had recently in different price points. Many multiple offers going in. One of them was 14 multiple offers. My buyers did not get it. A cash offer got it. There was 2 cash offers in that bulk. Another one, I had the cash offer, and they got 2 of the 3 houses they put offers on. And they went, and that was in 150K range. They went $15,000 to $20,000 over. Somebody in the 400 range went 10,000 over, but that was back in January when you could do that. But then in the same boat, another agent at my office said in the 400 range, she went 26K over and did not get the house. Of course, it's a house by house, case by case situation. We never know from the buyer side unless only the listings agent will know what happened at the end of the day, how many offers came in. That the one particular one, the 200 and the 250 range, she happened to email out and said, hey, 14 offers came in, this many people had this and this and this. So it was really helpful to let our buyers know, hey, if you want to be competitive, you're going to need to throw these variables into the offer. And so if you ever have questions on that, reach out. We can talk more in depth about that. But yeah, that was today. A client of mine a year ago, she had put in, they're not looking specifically, but they had put in an offer and had heard now from neighbors and whatnot. This is a newer client of mine, had heard that they don't have to go into the multiple offer situation. They don't have to bring all this stuff in. And that's not the case. It was the case for November and December. If you followed any of my social media posts, that buyers got deals. On my listings, the buyers got deals. Just because the interest rates are heading up toward the 7s. Now it's just an issue. Even though the interest rates are high, the issue is there's just so few listings. All these buyers are competing against the few listings that are out there still at this point. So even though the interest rates are raising for a little bit, if you're looking to buy a house, they're coming out now. Of course, the season's kicking in and just so few houses to, so we're not really seeing deals right now. And it is going to be house by house dependent. If a house is overpriced, yes, it's going to sit on the market. If it's not priced, you can't just throw out a number and so expect all the buyers to come unless it's a really desired house in that. But anyways, okay, so let's see. Days on market, sale price, as you can see, went up 180 to 193. And I shared this information, by the way, with this client that asked me earlier today about this. I was able to say, this is the perfect example. It's peaking up. And this is from last month. I'll show you that data in a little bit. Days on the market were 5. Now they're going to 9, a little bit longer on the market. Again, that's probably, the variables of the delay of the interest rates increasing at the end of the year. That's going to start going down right now. So once we show March and the other data, the next time I do this, again, houses are going, I'm seeing multiple offers on almost everything. I showed a house the other day and that actually has not gone under contract. Surprising. It's in a good area in West Wichita. It seems like it's priced right, but and very updated. But the house was a little bit not so open, which more people want. And it was priced at the high of that particular subdivision, but super cute house. But again, probably just not priced appropriately at this point. Percentage of, so everything's basically showing 100%. So it's going at list price. Again, we're still seeing multiple offers. We're going to start seeing that number go up too, just from my experience with all my clients right now. I have a lot of buyers right now. So it's been a lot of multiple offers. And let's see. So let's see. Here we go. So February of last year, we're looking at 658, and we're down about 100-ish. Median sales price, like I showed you, 180 to 193. Let's go down to closed listings. Again, we're just showing, that kind of just shows you the overview of 2021, 2022, 2023. And check this out down here, closed listings. There's so few houses on the market that the little blue line is so far down there at the 568, but it's going up. Or I'm sorry, that would be 524. This would be 568. And that's basically what closed each of these months. As you can see, we're significantly far down from the green, the 2022 and 2021. And let's see. So going down here, this of course just shows closed listings by price range. 3 in the $1 million closed. And let's look at the high one. The 200 to 300K, which 250 to 300K kind of being the bulk, the highest. So the most popular segment is that. But 200, even look from 200 to 400. That's where the bulk of Wichita MLS numbers are hitting. And this just shows the month supply in each of these price ranges. You can see, $1 million and up takes 5 months. Where anything down here goes super quick, from 25,000 to 250,000. Not much inventory there. And so this is median price of the closed listings. This was that number we were looking at. So even though the inventory was starting way below, the price is starting above the last 2 years, and it's just going to increase. And I completely see that happening this year. Again, the listings are so low. So hopefully interest rates will continue to come down. But this kind of shows that I kind of look at 2022. You look at May through December in the 200s. And then it went a little lower, which made sense with what happened in November, December with interest rates. And then it went right back up, and it's just going to probably hit the 200s, I would expect, for March. And then I'm gonna guess it's going to be 200 from March through the end. Now we're looking at average or median days on market. It's going down just with the listing inventory. This, as you can see, November, December with the interest rates of last year when it went up, the days on market increased because the buyers literally stopped when it started getting to the 7s. And of course, for the rest of the year, it had been some low interest rates. But the days on market will decrease. We're going into the season, and even with the interest rates, especially with that news we just got 2 days ago. And that thing I was reading in the beginning of this video was something that came out that I received today. These are active listings. So ton more active listings. That is just great to see. The median price of active listings, $239 last year to $319. Again, a pretty good sized jump. So what, $239 was the median of the active listings last year, and now it's already over $300 by a good deal. Gosh, that's almost getting close to 100K over. Days on market. Looks like it's taking a little bit longer, but again, I think that's just end of February. Things did pick up a lot in January from buyers' perspectives, and you still got a couple deals in January, but that I had one lucky buyer that squeaked in, won the multiple offer at I didn't think they would. They didn't go high enough over. I thought, oh, of course, you never know until after, but great for them. And like I said, it changed, and then they knew that they lucked out. They knew from just seeing what was going on and with us, our discussion, that they would not have gotten the house had it been like just a week or two or so later, just because the being that I think it was really nice weather too. The buyers came out a lot more in January, February of this year. This is just an interesting history of active listings. As we can see, it's just gone down, down, and down, and we're trying to get back up. Builders are trying to get back up. This active listings month. So again, this looks great though. Look at 2021, 2022, January, February. We've got a lot more active listings. So great news, even though we still have a lot more active buyers. So hopefully this 1,000 keeps going up and up and up, where you look at January through June, we're all under 1,000 the last couple of years or so. And this is active listings by the price. As you can see, let's see. So 300 to 400 as the most inventory here. You got 24 that are $1 million and up, but 300 to 400. You've got the majority of inventory. So that's also with some new builds, and then that starts, a lot of price points in there. And here we've got, let's go to the median price of active listings. So here it said, this is that jump we looked at, 239 to 319, and even, so the median price, these are listings that are actually active right now. This is not closed. These are active on the market. So you can see last year, let's look at 225, and that kept going up, kind of stayed the same here. Up, a little bit down, back a little bit down in November, which doesn't surprise me due to the interest rates, but not too bad. And those are listings, those are active listings. So, and now we're into the three. So we just hit the 300 mark, and by a lot into this February. So look at that. Oh my gosh! So in August, so 2021, we're still under twos for the active listings. That just shows you, that just kind of is showing you the price point and how high it's getting. So for active listings, days on market, this is not closed. These are active listings. Median days on market, 26. That's a lot higher than when you're looking at this is summertime in the teens, but that is lower than 2021. Again, that's probably just analysis because of the low listings when you're comparing year to year. And this is month supply. This is great to see. That just means we have more listings. We have 1.2 months of inventory, where I'm used to seeing this point under a month inventory. So that is just great to start seeing that right now. History of month supply, as you can see, it's gone down crazy with the low inventory we have. Whoops. Now, new listings is down from a month of a year ago, and then and down again. Total of 680 new listings were added during February. So, well, we're down in listings of February, but maybe I think more houses are staying on the market. History of new listings. So I'm going to switch it over for a second here to Sedgwick just to see some of the stats. So this is only Sedgwick County. See that? Sedgwick County. And so you'll see the numbers are lower because it's not including the entire MLS, but I wanted to look at price range in here. So 493, we're down 14%. Active listings are up. Great news. Let me get my cursor. And that again shows that increases the month supply. New listings down a little bit. Contracts written down. Let's go to median price here. This is really what I want to show you. So 194 to 218 from a year ago. Look up here. You got. So we're looking at current months, 2022 to 2023. 194,000 increased to 218,000. Days on market a little bit more, and still going at full price majority houses. Let's see again. Let's see closed. So this is closed listing. So last year more closed, 493. This year February 420 closed in February. And then the median sale price 194 to 218. Median days on the market was 6 days. That's down from 8 days in January, but up from 4 days in the other price. And then I want to go. This guy, I always like looking at this chart because it shows you month to month, year to year. So of course this is winter, but we did have a really nice January and February from a weather perspective. So in February, of course, interest rates got a little bit better. So, and again, the buyers came out strong, and so hence the 420. Because you look at last year, it went down, went from 500 to 400, and this year it went up. Again, that's just kind of a delay about November, December being high interest rates. And then even the year before, 600 to 500 in February, because usually it's really cold and miserable. This year was nice, and although still these numbers are still lower than the previous years, but I'm just gonna go with inventory and accumulation of. Let's see, and here we go so let's go to median price here quickly. So median price again, just always like to see all the last couple years. 184 to 190, 175 to over 200s. We started hitting over 200s a few months, about 5 months in 2021, and then last year, of course, every month but the first two, and then I'm sure this is going to be over 200 for the rest of the month or year. Come on, inventory. Average days on market. Oh, this is similar to 2021. And yeah, the average days on market definitely going to go down as we come into the season. So anyway, let's see. So yeah, if you have any questions on any of this, I know it's a lot of information to go over. I wanted to just kind of give the highlights of interest rates, since that was coming out and really just changed within the last day or two, at least on a good perspective. Buyers are still out in droves regardless of the interest rates. And if a house is priced correctly, and if it's anywhere near the 200 range, I mean, like those are, or below that, I mean, I'm seeing 15, 20,000 over is getting it. Still the cash offers, if there is a cash offer, it doesn't mean there's always a cash offer, but in that 200K range, it can be to 250. I know a couple of my buyers, and I said I have buyers on a lot of different price points right now, so I've been writing a lot of offers. Several of them have been getting it, several haven't, or it's taken a couple times, and so still looking with a lot of other buyers. But yeah, any questions on any of this, give me a holler, and thanks for watching. Have a great day.